If you own a 401k, an index fund, or you just throw money into the S&P 500 and forget about it, you are already making a massive bet on AI, whether you wanted to or not. Roughly 40% of every dollar you put into a basic S&P 500 fund goes into just a handful of mega-cap names, and most of them are riding the AI narrative as hard as they can. So the real question is not, do you invest in AI? The real question is, how deep in the AI bubble are you already? Today, we are going to unpack how AI quietly took over the stock market, why trillion-dollar expectations are baked into today's prices, how companies are using circular financing to keep the party going, and what that means for regular investors like us. Let us start with the index, because that is where most people are exposed. The S&P 500 is what is called a market cap weighted index. If AI keeps winning, that is amazing. If it stumbles, the safe index suddenly does not look so safe. Now here is where it gets absurd. To justify current valuations, the big AI and cloud players would eventually need to generate something like $2 trillion a year in combined revenue from AI-related businesses. For context, even when you add Apple, Amazon, Microsoft, Meta, Nvidia, and Google together, they still are not there. So the market is already pricing AI as if it will become the biggest money-making machine in the history of capitalism, bigger than today's tech giants combined. Is that impossible? No. Is it guaranteed? Absolutely not. That gap between current reality and future expectations is what people mean when they say bubble risk. So how are these companies funding all this insane AI spending? Here is the simplified version. Nvidia sells GPUs to cloud providers and AI labs. Nvidia also invests in some of those same AI companies. Those AI labs then sign huge cloud contracts with Microsoft, Google, Oracle, and others. The cloud companies point to that demand and say, look at all this usage, we need more GPUs. And then they go back to Nvidia and buy more hardware. Nvidia uses the profits and the inflated stock price to raise more capital and invest back into AI projects. Money moves from Nvidia to AI labs, from AI labs to cloud providers, from cloud providers back to Nvidia. On paper, everyone shows growth, everyone justifies more spending, and the whole thing can be financed with debt, private credit, and joint ventures that do not always show up clearly on balance sheets. It looks like profit, but a lot of it is recycled spending. You might think, okay, who cares? Let rich tech investors play hot potato with trillions of dollars. But here is the twist. When a handful of AI and semiconductor names drive 30 to 40% of index performance, they are no longer just stocks. They are systemically important. If their AI capex suddenly stops, economic growth slows, the stock market sells off, and politicians start getting very nervous. That is how you quietly slide into a world where these companies become too big to fail in practice, even if nobody says it out loud. So when AI gets bigger, the chances that taxpayers eventually backstop some part of this ecosystem also get bigger. Now layer this on top of what some big name investors are doing. Warren Buffett has been selling stocks and sitting on a massive pile of cash. That usually means he does not like the prices he is seeing. Michael Burry, the guy who became famous for calling the 2008 crisis, has placed large bearish bets against some of the hottest AI names. They invest in very different ways, but they are both effectively saying, this future is priced too perfectly. Does that mean the world ends? No. But it is worth paying attention when people who almost never agree are nervous at the same time. So what do you do with all of this if you are not a hedge fund? You do not have to sell everything and move to a cabin, but you should understand what you already own. If your entire net worth is in a market cap weighted index, plus a few AI names on the side, you are probably more concentrated than you think. For most people, the answer is boring. Diversify, avoid leverage, stop chasing whatever is up 200% on social media, and give yourself a long enough time horizon that a bubble popping does not ruin your life. Want to know how we trade this major technology trend? At Truthsayer AI, we trade every single one of the alerts our AI generates. If you are interested, you can join the thousands of clients already on our app who are taking advantage of these trades every day. Remember, we trade every one of our alerts our machine learning and AI models generate. Sign up on our website. You won't regret it. Thank you for watching, and don't forget to like and subscribe.